Hey, how are you? What's up, guys? This is Marty speaking right here. I'm the local agent right here in Santa Clara County, California, in San Jose. Sometimes I spend my area to Alameda County as well as Contra Costa County. Right now, I serve for the entire Northern California. I'd be glad to help you. And today, I'd like to share with you 5 things I learned the hard lesson from my 2020 year, which is not very good to share, but I wanted my customer to know so that you can learn from my mistakes and learn from my lesson so that when you come to me, I'd be glad to help you. We can get a lot of smoother transaction and make it faster for you to close. Therefore, you can move into the house that's easily. So the first thing, really the first that is save big portion of down payment. Now, if your portion of down payment is not enough, then it's very hard for you to qualify it, or you can qualify, but then you will have to borrow a lot of money. Then that will in terms hurt you doing the monthly mortgage payment. Every month you pay a lot, and which is not gonna be because you're not gonna be able to save a lot of money, or you can even come up with a problem for your living standard, and that's not good. So we want you to save a lot of down payment. The way to do that is that you take a lot of money or some money every month to save. During the year you save after, and the end of the year you probably get some bonus. If your company is making money, they will give you some bonus, and you probably save up the 401ks, or you have a stock option. You have a lot of those kind of other savings comparison to your regular savings, so you can use that for your down payment toward your house purchase. The more the better. Usually we want it to be 20%. That is the very usual because you can save your mortgage insurance right there. You reach 20% of your house purchase, 20% in mortgage savings for the insurance that you don't need to pay, which will be benefit to you. And also, if you save more, that you can use for 25% down payment, which will make your interest rate even more secure, which means you get a lower interest rate. Down payment in terms is big, interest rate is low, therefore you pay lower monthly payment. That is benefit to you, and also it will be good for your family in the future that you don't just pay the money to waste your mortgage. You don't have money to use toward your own future for the emergency fund. So that's very important for that. And let's move on to the next one. Now we were talking about that, and now you want to make sure you qualify for this kind of range. Then you buy the house. You want to make sure it's buying for that is the qualifying range. Let's say you qualify for $700,000. Then you look for a house that is below $700,000, usually between 600 to 680,000. That's my recommendation, because if you buy exactly $700,000, you might not be able to get a house, because people starting from 700, from that price range, when they jack up the price, when they have many offers comes in, they will be get even more higher than 700, then you're not qualified to buy. So you look for a house that is your qualified range. You want to look for below that and use that as your leverage so that you don't get into this financial disaster later on that come to you. That's something that I would like to show it to you. Now we talk about this next thing, that is where do you want to live. Now a lot of people, they want to live in a certain area because they have kids. They want a school district to be good, or they want it to be certain area so that they don't worry about the noise of the city in the downtown or next to some factory neighborhoods or some of the commercial neighborhood. They wanted to live in residential neighborhoods so that there's no a lot of bothering at night or in the morning, or somewhere far away they can hear the train come by with all the horn, all the sounds over there, and that is something that is very disturbing. So the place you want to search should be the place that you want to live, and you only focus on that if that's possible. But sometimes you focus on somewhere, the house range, the price range might not be able to fit you. So if that's a problem comes up, you might want to think about moving to other city, other places that's lower price range and is in a good neighborhood as well. That's one thing, my recommendation to you. You don't have to start with the place you really want to live in. That's something. And the next thing I wanted to share with you is to build up your credit score. This is very critical things about credit score. Credit score, that is something that you should build up in a daily basis, monthly. You make sure you pay off all your credit cards, you charge accordingly, and you don't sometimes come up with a very big payment, things like buying a car, buying a big piece of furniture that costs you a lot of money. All of a sudden you cannot pay, and then you have to pay monthly to pay back. Somebody say that you can pay monthly to pay back, but then if you don't pay off for your credit card, then it's gonna build up. It's gonna damage your credit score. So my suggestion is that you buy regularly, and you buy grocery, you buy your regular shopping, gas, everything, or online shopping with a credit card, but you want to pay off. Make sure you don't buy big items so that you cannot waste your money or waste your time not be able to pay and build up your interest. And then you'll be compounding for your credit card bill. That'll be very hard for you. So pay off your bill and pay regularly and shop regularly so that you can build up your credit score. Usually 3 credit cards is able to help you to build up your credit score. But you gotta make sure you charge regularly and you pay off every month. That is a very big important thing I like to stress. Next thing we have is a contingency. Now the contingency watcher, we really like to say is sometimes I didn't pay that attention from my first study with this career, with this real estate. And then in the long time, I realized if we don't meet the contingency date to finish what we need to do, then there's going to be a problem. Then we probably cannot even buy the house. End up they will fulfill the down payment, the initial payment we have toward the house because we cannot finish. Usually, all the agents are very nice. They're willing to give back the money to you if you can buy, but you gotta do it before the terms of a contingency. Now there are 4 contingencies we're talking about. One is a loan contingency. You gotta get a loan company lender's approval. Second thing is the appraisal contingency. You gotta get the contingency, the appraisal to do the appraise, make sure they can pass you, and the range is pretty much close to the price house you want to buy, and the price that is agreed with the selling agent, with the seller, so that when the appraisal comes up, you don't have a lot of trouble. And then the next 2 things is just material facts. One is a seller disclosure, that sometimes maybe somebody died in the house, and that's not natural, but they have to disclose within 3 years. Some people don't like that fact, or something, the renovation, because something happened, the foundation, they need to disclose to you that this is what they've done. And if as long as they fix a problem, that'll be nice. But if something they didn't fix, but they disclose something, that will turn away the buyer as well. So that's something we should look into when we see the house. And the next thing is reports, the inspection reports. That is gonna be the termite inspection, or the roof inspection, the home inspection. The 3 major inspections that usually someone would turn away just because of that. So that's something we should take a look into when you buy the house. I'll be here glad to guide you through, and anything you can contact me right here in California. Thank you so much. And this is all I learned for 2020, for all my experiences, for all my 9 cases for 2020. It's going to be another case, probably hopefully we can get it done before 30th of December. And but so far I have 9 cases done. And just for beginning, the agent, which I think is not proud, I should be proud of myself, but I want it to be better for the coming year. If you have anybody want to buy a house, want to sell a house, let me know. I'd be glad to help you to service right here in Northern California, in the Bay Area, Santa Clara County. And anything else, you can let me know and contact me. I'm here to work. For me to work, I give you the good results. And thank you so much for you tuning in. Today, we talk about the 5 things. That is, we got to save the big portion of down payment, and you got to buy within your qualified range. And where do you want to live? Build up your credit score as well as contingency watcher. You gotta make sure you watch your contingency so that you can buy your house eventually. And thank you so much. Any question, please let me know. I'd be glad to help you. We'll see you next time.